More and welcome to Financial Empowerment. I am your host, Ifabemero Fahim Ali Bey, and I would open by reading an essay from the Udu Owori Meiji. It is entitled Iwori to Ori. Ori mi buemi, ori mi lami, buemi atete nira. Bimi ate te, bueni kufosa. Ori ni buemi ni, ajawo ki seosa. The English is, support me, my Ori. Make me prosperous, my Ori. Ori is humankind's supporter before deity. All right, now to proceed with today's stream. On today's stream, what we want to discuss is a couple of what is called financial instruments. All right, I'm trying to keep the stream as simple as possible. I'm trying to keep the topics simple as well as the instruments as simple as I can. This particular subject of financial instruments would correspond with what we have done before called investments, but today we are going into particular types of investment. All right. Financial instrument could represent a contract we can trade in a market. It represents an asset to one entity and a liability or equity to another. All right. Generally, when we talk about financial instruments, we're talking about basically what is available on the market where you would be contracting in order to be able to produce some sort of a profit through interest. All right. As I mentioned before, a financial instrument is a monetary contract between parties. Right. We can create, trade, or modify them. We can also settle them. A financial instrument may be evidence of ownership or part of something, like in stocks and shares, which is part ownership. Bonds are contractual rights to receive cash, are also considered financial instruments. All right, so today we would go into a few types of financial instruments, as I said before, without becoming too complicated. All right. There are specific type of financial instruments that are available on the commercial market. All right. The first one I would want to speak about fall under the category of securities. First one I'm going to speak a little bit about is something that is referred to as bonds. All right. The bond is a debt security under which the issuer states, under which the issuer owes the holder a debt and is obligated to pay them with interest or to repay the principal at a later date. This date is normally termed the maturity date, and the interest is usually payable at fixed intervals, whether it be semi-annual, annual, or in some cases monthly. All right. Um, there are a variety of type of bonds that are available on the market. In some cases, you would have government bonds, which generally tend to be the most secured type of bonds. Um, Bonds are issued by government and corporations when they want to raise money. Okay, so basically what they're doing is they're taking a loan from the persons who purchased the bond, right? What you are doing, you're giving the person who issued the bonds a loan, and then they agree to pay you back the face value of the loan on a specific date and to pay you periodic interest payments. Okay. A layer closed payment along the way, usually twice a year. Now they use a lot of complicated words. All they basically mean is you get some interest on your capital twice for the year. In a nutshell, that's what it really is. All right. You would hear terms like municipal bonds. Um, right. The face value of a bond represent the amount to be repaid at maturity. All right. What else you might want to know? Basically, the different types are based on the type of payments that you receive. You have fixed rate bonds, right, where the interest remain the same throughout the entire tenure of the bond. So this is why it's called a fixed rate, right? Then you have things such as the floating rate bond, the zero interest rate bond, and the inflation linked bond, the perpetual bond, the subordinate bond, the bearer bond, and war bond. Right? Of course, these different type of bonds would be different means by which they would be raising money, and the terms of the bonds may vary depending on which one of all the above it may be. All right. Now, the question that you might want to ask is what type of bond is considered to be an investment type of bond, right? The issue of investment probably would go along with the idea of what level of interest that you actually acquire on particular types of bond, right? But bonds are in fact types of investment that result in an investor lending money to the bond issuer in exchange for interest payments. Bonds are one of the most important investment available for those who follow an income investing philosophy, hoping to live off the money generated by their portfolio. Okay, your portfolio is like a collection of investments. That is generally what a portfolio is. And one of the reasons why bonds are one of the favored forms of investment is because bonds generally tend to be secured. By that I mean the government guarantees it, or the corporation have some sort of guarantor who stands behind the bond, meaning they're telling you you're going to get back the money you invested, as well as there is some sort of a guarantee on some level of the interest that you have agreed on. All right. Now, the question is, we're now in 2020. Would bonds be still considered a good investment, even with all that is taking place currently in the world economy? Well, many bonds investment has gained a significant amount of value so far for this year, for 2020. And that helped those with balanced portfolio with both stocks as well as bonds. But we will get into stocks a little later, but bonds is our issue right now. Bonds hold up better than they have otherwise. Bonds have a reputation, as I've just mentioned, for safety. but they can still lose value. All right. Now, are bonds a good investment? Bonds pay interest regularly, so they can help generate a steady, predictable stream of income from your savings. Securities next to cash, right? I have done some investing before years ago in U.S. Treasury bonds. One of the things about bonds is that they are redeemable and they guarantee you could get the face value anytime you redeem them uh, prior to the terms of agreement. Meaning, uh, the terms of agreement would be the bonds, each bond come with a different lifespan. So if something happens, should you, God forbid, if you have an emergency, you could cash in the bonds at any time and you are guaranteed to get the face value of the bond. Right? In some instances, depending on the type of bond, you might even be able to get whatever the value is at the moment, meaning with whatever interest on that capital at that particular point in time when you cash it in. All right, a bond is a fixed income instrument that represents a loan made by an investor. Yes, a bond is a fixed. Let me address that. Right.
Hey, Baba.
Baba, I'm on a live right now as we
Oh,
speak, so you will
all
have
right,
to call me after 7.
all right, all right.
All right.
Pengu Lupe,
Okay.
check
My
now for you.
apologies to the people who on the
No, no,
live.
no problem, no problem.
Yeah. All right. Yeah. So my apologies to you viewers on the live stream. I just had a little call there. All right. So yes, going back to it. A bond is a fixed income instrument that represents a loan made by an investor to a borrower. All right. Typically, corporate or government type bonds we're discussing here. Right? Bonds are used by companies, municipalities, states, and sovereign governments to finance properties and operations. Owners of bonds are considered debt holders or creditors. Okay? Um, what else about bonds? Bonds are guaranteed, which I mentioned before. Unsecured bonds, on the other hand, are not backed by any collateral. That means the interest and the principals are only guaranteed by the issuing company, also called debentures. These bonds return little on your investment if the company fails. All right. In terms of the secured bonds, normally the amount of bonds issued is normally backed by collateral in terms of government bonds and municipal bonds and these type of secured bonds, right? Now, the next question here on this list is, are bonds safer than stocks? By the way, most of my viewers who have internet, you could actually get all this stuff online, but I'm nonetheless sharing it with you. Right? Are bonds safer than stocks? Bonds tend to be less volatile and less risky than stocks. And when held to maturity, can offer more stable and consistent returns. Interest rates on bonds often tend to be higher than saving rates at the bank or on CDs, which is cash deposits, or in money market accounts. So basically, what they are telling you here is that it offers more stable and consistent return. when held to maturity. It's also less risky and it's less volatile, meaning that the interest rate doesn't jump up and down all the time. All right, but then again, there are different types. You have some of those that come with fixed interest and some of those with flexible interest rate. All right, the next question is, what is the riskiest bond? And the answer is corporate bonds, right? Versus government and municipality. Corporate bonds tend to be the riskiest of all that you can invest in. Bonds issued for profit companies are riskier than government bonds, but tend to compensate for that added risk by paying higher interest rates. All right, in terms of investing, I do not know if I mentioned it in the last stream, but generally, investments that pays high levels of interest tend to generally be riskier. Okay, meaning the possibility of you losing on your investment is greater. But the advantage of the high risk type investment is that the interest tend to be very high. Okay, so I mean, if your blood pressure ain't good, I wouldn't suggest you invest in high risk bonds, right? You would want to like keep your blood pressure normal. So you might want to invest in something that is a little more sturdy than corporate bonds. All right, but if you're looking for quick interest and high interest, yes, corporate bonds is actually the way to go for that type of risky investment. All right, the next question is, what are the major types of bonds? And there are three primary types of bonding. No, well, no, not at all. This doesn't relate to the purchasing of bonds as an investment. All right, investor buy bonds because they provide a predictable income stream. All right, meaning if you have a payment every 6 months or every year and it's a fixed interest rate, then you are certain that you're going to get that money when 6 months come. So in terms of investment, this one provides a predictable income stream. All right, and that is, of course, if it is held to maturity. All right, bondholders get back their entire principal. So bonds are a way to preserve capital while investing. Bonds can help offset exposure to more volatile stock holdings. All right. Well, we already deal with the issue of the timing. All right. A question is, seeing that it's a type of investment, a question that a person may ask is, bonds can lose money too, or can bonds lose money? That's the question. All right. Yes. Can bonds lose money? Hardly likely, right? But you can lose money on bonds if you sell it before the maturity date for less than you paid, or if the issuer defaults on payment. All right. That will depend largely on the type of bonds. Maybe for corporate bonds, you may have defaulting on payments, but generally with government bonds, you don't really run into too much problems with it like that. All right. I might want to now go into this thing that a lot of talk has been circulated about, called stocks. I would first explain what is basically a stock. All right. I'm sure everyone has heard of what's called the stock market. All right. The stock market, like any other market, is a place where people buy and sell. So the stock market would basically be a place where people buy and sell stocks, or the other term they use for buying and selling stocks is trading stocks. Okay. Um, a stock, also known as an equity, the other name for stock is equity, is a security that represents the ownership of a fraction of a corporation. What do they mean? One stock represents one part of an interest in a corporation. Okay? The stock entitles the owner of the stock to a proportion of the corporation's assets and profits equal to how much stock they own. Units of stock are called a share. All right? We understand that. We understand what a stock is. All right? And we understand what a stock market also is. I would go further now to give an example. What is stock example? Stock means a share in the ownership of a company. An example of stock is 100 shares of the Disney Corporation. This is the example they gave online. The definition of stock is something that is in normal supply or common. An example of stock is clothing in sizes small, medium, and large in most clothing stores. All right. So they even give you a regular example beside the idea of having shares in a company such as the Disney Corporation. Now, they gave some example here of various stocks that you could buy in various corporations, and they also gave you some examples of what is the hot stocks to buy, meaning that the stocks that probably currently are rated as having the highest points in the market. All right, based on the trading performance of a stock, it is assigned a particular amount of points. All right. Right now they say the three hottest stocks on the market would be the UPL stock, Sun Farm Industries, and Kotak Ma Bank. Right. Just a tip. Right. UPL is the target price is 596 to 600 US. Sun Farm Industries, the target price is 460 to 462 US per stock. The Kotak Ma Bank is the target is $1,706 to $1,710. All right. I wouldn't go. Those were just examples of what's going on with the stocks right now on the stock market. But I don't want to get too much into that because I'm not telling people to invest, and I'm not advising you to invest in those that I mentioned. They were just mentioned as examples of what is currently going on. All right. Now, the next question a person would ask is, where are the best? Where do you get money from stocks? Right. There are generally two ways to make money on stocks. The first is when a company pays a portion of its profit to you as a shareholder in the form of dividend. Dividend, which is something came up already when we was talking about credit unions. And if you hang on to a stock that has gone up in value, you have what is known as an unrealized gain. Because it's only when you sell the stock that you have locked in those gains, right? Meaning that how much ever interest that has been added on to your capital investment, the only time that you could actually get that is when you cash out and you get that in hand. Other than that, the stock continues to either depreciate or increase in value. Appreciate is the word they use. So basically, that's the idea about stocks. Where do you actually get stocks? Okay, there are persons who has companies who trade stock on a regular basis. Um, you have consultants, you have brokers, you have people who play different roles in the whole stock market scenario. Um, the broker is a person who buys and sells, and they do so on your behalf. A consultant might be a person who may sit with you, find out what is your financial situation, find out what type of investments that might be best suited your financial situation, and may advise you on what type of stocks you can purchase. The broker would, in most instances, also serves that purpose. But in a lot of instances, the advisor may not necessarily be a broker. In some instances, they may be. But in both instances, what you find is you have people who sort of specialize and are highly trained in the particular area that they practice. All right. You may have also, if you haven't, I'm going to tell you, there is something called, it used to be called penny stocks, right? But, questions may ask, well, the question you may want to ask is, as a beginner, where would you want to start? Would you want to start in stocks that has low value, or will you want to start with stocks that are guaranteed to appreciate, like some of the most stable companies? Um, Two factors: how much money you have and available for investment. That's the first thing. And the second thing is, what is the purpose for your investing? That would sort of, create a map as to where your money should actually go. Um, on the internet, of course, they give you an advice on some of the best stocks to buy for beginners right now. And it would appear to me that most of the stocks that are listed here is some of the more stable and good performing corporation stocks. Right, like they have listed here is Alibaba, Alphabet, Amazon, Apple, Disney, Facebook, General Motors, and Microsoft. Right, again, I'm not an advisor, I'm just telling you what's out there on the World Wide Web for information. All right. Which stocks are up today? The gainers are Landmark Corporation, ACN, Accenture, PCL, PHM, Palte Group Incorporated, PAYC, Paycom Software Incorporated. These are the stocks which were up today, and they were up between 4.37 to 7.67 points. All right. For today, I would just stay on those two instruments, but I'm going to now sort of bring it local and tell you which companies sort of invest heavily in the stock market in Trinidad. One of them is Unit Trust, right? You sort of don't have a whole range of control over how they invest your money, but what they have is different types of accounts that would give you a general idea as to where your money is being invested. All right, and basically it's a service. You could discuss it if you're a member of Unit Trust. They have brochures that generally give you a fair idea as to which money market your money is actually being invested in, and that would sort of help you to sort of have an idea where your money is being invested, and possibly what are the rates of interest that you would actually be able to get on your money. right? Unit trust. I have been having accounts in unit trust since I was probably like I was 16 or 17 years old. And generally, when you go into your account with unit trust, um, every 6 months to a year, you do see some appreciation, right? I think they do send statements out ever so regular, so you would have an idea maybe what's going on with your account. Um, you don't really see unless you have a lot of heavy cash invested in unit trust. You don't really see great appreciation taking place on your monthly accounts. Also, to that would depend on the type of account that you have, but generally you see some kind of an interest. You don't really see much loss in your statements with unit trust. Um, these are basically the instruments that I wanted to touch on that locally are available: the bonds and also stocks. So you have stocks and bonds. So let me talk a little bit about them, a little more. Just some of the general terminology that you would hear people use in reference to the stock market. All right, you would hear the term bull market. What is a bull market? All right, a bull market is a market that is on the rise and where the economy is sound, while a bear market exists in an economy that is receding, where most stocks are declining in value. All right. Now that we know what is a bull market and a bear market, if you hear any stockbroker or any financial person use the term bull market, they are talking about when the value of stocks generally is on the rise and it is a reflection of the economy of a country. Whenever you hear people talk about the bear market exists when the economy is not doing so well, right? And when the value of the stocks is declining. Now, let's talk a little bit about the economy and the way in which it affects what is called the stock market. All right. Now, you would hear the term um, confidence. Okay. You would find a lot of times when the economy is performing well in any country, people tend to have confidence in the stock market. So people tend to invest more when the economy is going very good. Um, what indicators in an economy measures, the performance of the economy? What are the indicators? All right. I'm sure we may have heard of a term called GDP, right? GDP is one of the main measures that is used in economics to represent the performance of an economy, right? GDP stands for gross domestic product, right? And it is the standard measure of the value added created through the production of goods and services in a country during a certain period. As such, it also measures the income earned from that production, or the total amount spent on the final goods and services. All right, and that is minus the import. So the gross domestic product sort of measures the production of goods and services in a nutshell. Now, what is produced in a country may or may not be consumed or used in the case of a service in that particular country. This is why in the last part of the definition they mention final goods and service less import. All right, because goods and services that are created in your country may not be the only goods and services that you utilize. You may use goods and services coming from another country, as well as you may export your goods and services to another country. So what the gross domestic product does is it affects something that you're going to hear. This is another important term, especially when you're dealing with goods and services. You would hear the term balance of trade. All right. Balance of trade is the difference between the value of a country's imports versus the value of a country's export. Yes. What you bring into the country versus what you carry out of the country. And how does that particular thing affect an economy? Okay, pretty simple. If a country consumes more of the stuff that it imports, and very little of what it produces, then that country is going to have to be spending a lot of money to get those goods or service, or goods and service, into the country. And the less products they export would mean is less income for them. So if you have more expense and less income, then what we're referring to as a balance of trade would run us into what is called a deficit. All right, now let me read the definition, the standard definition for balance of trade. The trade balance is the net sum of a country's exports and imports of goods without taking into account all financial transfers, investments, and other financial components. So a country's trade balance is positive, meaning that it registers a surplus if the value of exports exceed the value of imports. All right, so folks, the aim is to produce more than you need and to use less coming in, less imports than what you manufacture in your own country, in order to have a favorable balance of trade where you would have exceeded the import value. All right. In defining this, what word did I walk into there? The word deficit. I mean, I'm sure you've heard them talk in Trinidad, the government talk about budget and deficit and blah, 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 blah. So the question is, what is a deficit? All right, a deficit is the amount by which something, especially a sum of money, is too small. All right, an excess of expenditure or liability over income or asset in a given period. The amount or score by which a team of individuals are losing. So a deficit is not a good thing. I would give a very simple example of what I mean. If every month your income, which is the term that the government like, but the money that you earn for your livelihood is less than the expenses that you have to pay out each month, then my friend, you are in a deficit. And most likely you're running into debt too, because you probably had to borrow some money to travel to work during the week. Because by the time you get paid, all the money done. So this, my friend, represents what we call a deficit. All right, now we don't want to be in that condition where we always have to be borrowing. So on one of the previous streams, we addressed how that is dealt with. But I will give a little review for those who probably didn't have a chance to hear from that particular stream what I explained that would cause you to find yourself in a good position where you won't be able to save some money. We spoke about something called the Shoebox Method. So if you go back and you look at the stream that deal with the issue of budgeting, you would hear about the Shoebox Method. The Shoebox Method is pretty simple. What you do is you get yourself a shoebox. And during the course of that month, every single thing you purchase, you're going to get yourself a receipt. And when you get home, you put your receipt in the shoebox. At the end of that month, you sit down with all these receipts and you examine the way in which you spend money. So you would have a record of how you spent money during the course of that month. Once you know how you spend your money, together with looking at all the bills that you normally pay during the end of the month, then now you can sit down to making a plan. That plan is going to include all of your monthly fixed expenses, like your rent, your utility bills that come monthly, lunch money, passage money, allowance for your wife, allowance for the kids, grocery bills, things like that. That is always going to be on that list. Now, because some of these expenses are fixed, you're not going to be able to really do much with them, meaning you're not going to be able to save $1 on them things. You have to pay your phone bill, you have to pay your rent, you have to pay your electricity, you have to, well, the electricity don't come monthly, but you know what I mean? You still have to put aside a part of the electricity money so that when the period comes, you don't find yourself having to dig too deeply in the money, in your income, in your money that you receive for working to pay that one bill that doesn't come monthly, that may come every 3 months or every 2 months or whatever. Now, in making that plan, we say the first and most important thing that you may want to do is you may want to put money away for savings. All right, whether this money eventually goes to unit trust or to your credit union saving account or on shares in the credit union, it doesn't matter. But the first thing you're doing when you're deciding to do a plan or a budget, that is the word for a plan, you might want to, the first column might be saving. You might want to save 5 to 10% of your livelihood, the money that you earned for your livelihood. And then the other most important thing is going to be those bills that must be taken care of, like your rent, like your utilities, like your food bill, like your passage to get to work, and that type of thing. And then after those things, then you would look at the last things on the list, going to be things like entertainment, the not so important things. The money that you realize you just spend bad, like the cigarette money and the way money, and some of the things that not really so important. But when you check the shoebox analysis, you realize, well, you just spend some unnecessary money. These are the things that are going to fall on the bottom of your priority list when you are making your plan or your budget. So those are the areas that could either be eliminated or reduced or adjusted in some sort of a way. Hopefully not increased, right? Because they're not really so important on your list of priorities. So that thing called our budget is one of the main ways that you are able to regulate how you use your money so that you don't run into a deficit each month where you have to go borrowing money. Right? We also spoke about things in the previous stream. There's just a little review to make up some time here to make the stream 1 hour. We spoke about things like investing in yourself. Um, we talk about reading, right? Educating yourself, trying to acquire some sort of skill that has the potential to either help you save money, you know, um, acquiring some sort of a skill that you could use around the home, or as well as that you could offer a service to someone else, yeah, where you could actually get some money from doing it too. These may include hobbies, by the way. It doesn't have to be something that you're just acquiring a skill only for the purpose of earning money. It could be you doing something you enjoy. There are people who enjoy baking. There are people who enjoy digging up in their car. There are people who enjoy doing remodeling around the house. So you have community development that offer all these range of various technical and vocational training that runs for a short period of time. So it ain't like you're going to be in school for a year, you know. It's just going to be probably a couple of months. You're going to get your little certificate and you would have acquired a skill that you're going to have for the rest of your life. All right, so investing in yourself, deal with things like that. And the reason we use the term invest is because you're going to get some sort of returns from it. All right. What else is going to affect your deficit? When we dealt with budgeting, we dealt with things like thrift, meaning using your money in an economical way. Yeah, meaning that you're trying to see where you could actually cut corners or save. I think we mentioned things like seasoning rather than buying the pre-made seasoning. That is something you could probably make at home. Jams and jellies, something you could also do at home. Baking, so you don't have to go, buying all the bakery bread and spending that few extra dollars. Maybe a pound of flour, some baking powder, some yeast, and you need some flour and you bake something, save yourself a few dollars there also. The skills that I mentioned, you acquire these skills, you might be able to save yourself a few dollars even around the home too. We talk about using fruits and vegetables that are in season. Mostly fruits tend to be seasonal. So we spoke about using fruits that are a little cheaper at market because during the season they tend to be abundant and the value, the price tend to go down a little bit. Using those tend to help you save. What other ways we could cut corners? I think more or less those are what I could remember, but I think we did cover a few more things. All right, well, I have 8 more minutes, so I would now start a wrap up. Okay, today was stocks and bonds as investment instruments. Maybe next stream, I might talk a little bit about insurance and banking, right? And how these things are used and how they should be used and what services they offer and how these services could be of benefit to us. All right, in closing off now, I would want to talk about community investments and cooperative economics And in closing off, I want to mention our community does in fact have a credit union. All right, I've heard of this quite a while back, but I've had an opportunity to make contact with some of the people who are actually involved. Right, I'm not going to run a full-scale ad and give the name and tell you where to go and join and all of that. But yes, eventually I would be getting into that. What I can say at the moment is that there is a credit union and they have a lot of really fantastic plans for the community. And hopefully, sometime within the few coming months, I'm going to be able to give members of our community the specifics so that they could actually go and join the credit union. Any other updates? Well, I would encourage members of the community to support all their local businesses that are owned by African people, and also to support members of the Ifa Orisha community in any business endeavor that they do. The idea of having business institutions belonging to our community is very important for our own economic survival. It also strengthens our communities. It provides employment and it improves the standard of life for members of our community, which would also mean that the ELAs would also benefit if we have working members. We would have more support in shrine activities. Any development? With the overseeing organization, I think there have been correspondences sent out to many of the persons involved. So that is some progress that is being made with bringing together a national organization for our community. What other community type announcement do I have? There are many businesses in the community. Please try and find out. We have to be able to network. Speak to people in your shrine. Try to find out from them who they know probably belong to another shrine in another district that is offering some sort of a good or service that you may need. Right? Probably we might be able to even on this particular program put together a directory. So what I would ask people to do on whatever platform you might be streaming, if you notice that I am a member on that platform, you can simply message me and give me the name of your business, the service that is being offered, and all the relevant contact information, like a phone number, an email, maybe even an address, a contact number, so that I could probably post up some sort of a business service directory for members of our community. All right. I would be very much looking forward to hearing from all the business people in our community, whether you have a small business, a medium-sized business, or a large business. This is the platform here with financial empowerment where we should be able to use this as a springboard for networking and for also knowing what services are available in our community. I might even be able to read out the list at the end of each show in sort of trying to give updates on various things that are happening in the community. All right, I'm going to do a plugin now for the Green Network, which is the Grassroots Education and Entertainment Network, which we are hoping to stream from next month, if not a little later. We might be having 24 hours streaming where we're going to have Ifa Orisha programs and information, as well as we would be having other programs on the network. I don't want to get into what we will be having with the exception of talking about a lot of community-based stuff for the Ifa Orisha community. We would also be including stuff that is going on in the African community on a whole. Green Network, of course, you could just search it on Facebook, because we're on Facebook, as Green, which is the Grassroots Education and Entertainment Network. Right? With this, I would like to close off, and I would like to say Oda Bo, and see you next week on our live stream. I hope you enjoyed. If you enjoyed, please like. And I am on Facebook. I am also on YouTube, right? Ifa Bemero, home of Ifa Orisha Tradition on YouTube, where most of these videos you can view them there. I am also on Facebook, Ifa Bemero Fihimali Bay. You could say hi there. And there, I'm also on several other platforms. We have the Ifa Orisha discussion group of TNT. You have the Orisha Baptist Teaching Moments. I'm in that group also. We have the Ifa Orisha Community Congress. We have the Irie Island Research. We have so many platforms. Just type in Ifa Orisha and then you're going to see a whole heap of groups coming up. Or just Ifa, you're going to see many groups coming up that are platforms where we educate, we entertain, we inform, and just in good old general, we just try to bring the community together. All right, Oda Bo.